Hey, what's up, guys? It's Justin here with Confident Options. Today is Friday, August 10th, 2018. We're going to go through two trades closed today. We had one earnings straddle and then one core portfolio position in AABA. But let's start with OMER. They had reported earnings going into close last night. We ended up going with the straddle just because it was a little bit lower price stock, and the straddle was able to get us outside of the expected move. The expected move in this stock was $2.54. So expected 254, and we collected a credit of 294, so that gets us outside of the expected move. The actual move was only 58 cents. So these are, I'm probably sounding like a broken record, but this becomes an expected underperformance of the market maker move, which is where our edge is and where the profit is. And so that's why we ended up selling the straddle in this case. It got us plenty outside the move. The move was obviously, like I just showed, less than the expected move, so we were able to close the contracts for $2.06 this morning, collecting about 5.3% on the capital that we put to work. So, of course, that represents an $88 win if you were just trading one contract, and you would scale up depending on the size of your portfolio and your risk, etc., to meet the to get into this trade. So let's look at the charts really quick. This one shows a good example of why we close the trade right away. This one moved crazy today. I think it was down 18.5%. So here's the close. The night we opened the straddle, and so we opened the 22, which was our nearest strikes, and that got us almost $3 out on each side. So that would have got us up to 25 on the top side and 19 on the bottom side. And remember, the expected move was 50 cents inside of that. It ended up opening pretty much right where we needed it to, right above 22, so we were able to close out those contracts. But again, that's why we close right away, because obviously it got tanked today. They were beating it up left and right. It went all the way past its expected move of $3 or $2.50, and it went to almost looks like $3.50 or $4. Yeah, so crazy kind of move today, but that's what can happen on some of these earnings events. You'll also notice here's the IV when we open the trade, and you can see how it crushed today. Even though we had this big move down, the IV still got sucked out of the contracts in this case. So that's our OMER earnings trade. One other thing to note on this is that we weren't able to get weekly contracts. Just not offered in this stock, so we ended up going with the monthly 17th of August contracts. Typically we don't do that, but when there is no weeklies to trade and we're at the Thursday, Friday of the week before, those next weekly contracts, or the next week's contracts, being the monthlies in this case, will kind of act the same as a weekly contract. So great trade for us there. Add another winner on the earnings trades for the month of August. We're doing really well. So good. Next trade up is AABA. So this is kind of a core portfolio position. We started by opening the 82.67. We had an adjustment in there, and this, sorry about that, guys, this should actually be 40 cents we collected in credit. So adding these together means we collected a total of $1.77 on the trade of credit, plus, and we sold it for $1.44. So that's where the profit comes in. So let's talk quickly through this, and then we'll get out of here for the weekend. So if we go over the chart, oops. Here is AABA. And I mentioned in the trade comments why I got into the position if you want to look at those. But essentially, we're looking for a stock in the financial sector. We didn't have any exposure to the financial sector, and this one had a pretty good IVR. So it was up here at like above 50. It was 70 or something when we entered the trade. So anyway, that's why we entered. Here's the day we entered the trade. And I love options because you never know what's going to happen to the stock. A lot of people use technicals or gut feelings, and that's just something we don't have to worry about when trading options. We can create nice wide ranges and let the stock do what it's going to do. If it's going to move randomly, let it move. So we ended up selling up the 82 calls here. So again, this is our call side. And then on the bottom side, we sold the 67 puts. So nice and balanced. it was a little bit bullish, I'd say. Just that's the pricing we got based on the deltas when we entered. So we entered these at 15 delta on each side. So when we got into the trade, it quickly started moving towards our 82 calls, and we didn't do anything, and then it started making a good move down towards our 72 puts. So in the case that this call delta goes from 15 to 30, that means our risk in the trade has doubled, and that we want to adjust the trade. And so we adjust the trade, and this is actually happening on the put side. So we adjust the trade by moving down the call. And so in this case on 8-3, we move the calls down from 82 to 78. You're just collecting more premium, and the more premium you collect moves your break-even point out further on the tested side. So that's the logic. And we also like this because we're getting paid to move those calls down. We're collecting an additional credit. So we close out the 82, open up the 78, and then today we went with the closing trade because we were slightly profitable on the trade thanks to the adjustment that we made, but we're also at the 20-day mark until expiration. So that's a signal for us that we need to get out of the trade. We don't like to hold trades past the 20-day mark. We find that you get a lot more volatility in your portfolio if you hold on to these closer to expiration. So that's why we exited the trade and got out. So let's look at the summary again. That way we can kind of add up the credits and everything that happened with the trade here, and then we'll be done. So again, we opened on 7/23, 82.67, and we collected $1.30. This is, again, I'll get it fixed, but it was 40 cents of credit that we took in. So that made our total credit $1.77 on the trade. And we were able to close today for only $1.44. And so we exited the trade. Again, we were about 20 days until expiration, which is why we got out. If you had traded one contract, it would have been a $26 winner. Very small winner, but winner nonetheless. I'd have winners all day that are $26 as long as I don't have instead of having losers, right? And so that's a positive for us. So that's it for the trade recap. As always, you guys can see all of our trades at confidentoptions.com/closed-trades. You can also go to the performance and closed trades tab to see those. And this is literally everything from the past 30 days. So poke through there, and at the very bottom there's a comment or an email form that you can fill out. If you have any questions, let us know. Have a great weekend. We'll talk to you next time.